Okay, confirmed we are live here. So today is April 13th, 2025, or 2026 rather, apologies. And we had a pretty impactful week last week. Today is Monday, starting the new week. But as you can see, we ripped up through this area. I had noted this imbalance right here and was saying to take a note on how we use that since we closed above here. And Wednesday, we got that rip straight up through this imbalance and this volume imbalance right here. Can't get it to my magnet. Right there. We ripped straight through it. And as you can recall, I had noted out these relative equal highs. I noted these relative equal highs last week, saying that that was a potential target, and we did make it up into that area. Now I just had this floating candle noted. Let me change the color of that. Because this is a new piece that we want to be looking at. See if we can hold it. But I think it's very influential that we came up here and took these relative equal highs. Now moving forward, that is efficient delivery for me, and I don't believe we have to get above this high, but I imagine that we are most likely going to do that. At least just like a little pop above it, a wick, but it's not required. Because one of the models that I would employ was sort of like this. Like we have that breakdown, creating relative equal lows, moving back into the range above this consolidation period, and then a sell-off. But on the NASDAQ, we have relative equal highs up here. And going into May with the new Fed chair, that could be our draw, because that would be the president's good guy that he would want to artificially inflate the market due to that and make it seem like we're all in good times. But with these wartime events going on, we could see literally anything happen at this point. So you have to respect the risk in that regard. But on ES here, we did reach up into this volume imbalance, which is very nice to see. And that was an inefficient area, which we've tapped into. So what I would be doing for this week is grading this area and just kind of observing how we react. Now, if we start to get a sharp break lower, because what I'm taking from this is that people are now starting to think that we're safe. And if you just would have bought the dip, then you would be in amazing standing right now. And everyone seems to say that. So that when the next one comes, it's going to be detrimental to a lot of portfolios. Because now they say, if we somehow make it below this low, that there's no way we don't go back up. And it's just going to rebound immediately like it did within 2 weeks. So that's something that kind of scares me here. I personally don't see it going back above these highs yet. I think we need more time. But again, I could be dead wrong, and I sure hope I am. But this week's opening gap was much lower. So I'm going to be watching that mainly throughout this week. Maybe I should. I'll just leave it for now. But that's what I'm looking at. We have this weekly opening gap here, new week opening gap. I'm watching that. Observe this area if we tap down into it. But that's the most important piece that I'm looking at right now. It's a very weird time in the markets. And I don't think there's a lot of big hands taking on the risk. Unless they got the call and are just buying it all up, but I don't see that being the case. Oil. I'd drawn out this volume bounce. We tapped down into that last week, and we're back into that's the wick. Correct, correct. I'm not very organized right now, and that's a slight challenge. I can take this off. But I like how we respected. We just gave a small little just a little mohawk right below that volume imbalance low and moved higher. I would have liked to seen it just take off from this high, but and then use this as a retrace and respect it to move higher. But I've been long talking about oil and where I want to see it go. Dow, I'm still not buying this whole little bull run. Like I've been saying, dollar is looking weaker. We are below that area that we had marked out, but we're gonna see this week what really happens. We want to hold this body's respect to midpoint. That's what I'm hoping to see. So we can dip down into here, but I'd like to see the body's respect that 98.098 level. And we'll have to reevaluate once it does. Still in that area on silver. Same kind of thing on gold. I'm sitting out for now, just as I wait for more information. That's kind of how I'm looking at all of this. We'll get our gap right here within the next couple minutes. We also have that so let me find the layout real quick and I'll pull this back up. So this is what I was looking for. You know what these orange lines right here are? So we have this new week opening gap high, low, and this is the halted trading hours gap from what I believe was November 28th, Friday, the day after Thanksgiving, when we had a trading halt due to a CME cooling issue for the futures markets. And whatever tomfoolery that was, these are prices that I had noted and I had looked at for a long time leading up to this point. I've pulled these from the December contract all the way out and have seen them used countless times. And right now we are currently sitting inside of it. A little interesting how on Wednesday when we made this long run up, we stopped almost perfectly within that halted trading hours gap. Now, isn't that funny? Isn't it also funny that this whole time, this was like something that we've never seen before in these markets, this kind of consolidation. And where this was actually priced in was like right here. I just have the adjustment, yeah. So right there, that this was the day, Friday, November 28th. And that was the day that we entered into this massive consolidation, consistently drawing up, back down, stopping almost to the tick, down, up, down. And this was used as sort of like a run through re-enter above, test it up like multiple times. Same thing here when we were drawing back down. It came up and tested this over and over again. So I think this is a very influential small range, that gap that was created, because of those specific prices, 68.42.50 and 68.35 even. It's going to be used now, and since we saw it used last Wednesday, and it's going to be used again. We're currently inside of it. So if we do sell off for whatever reason, that's going to be the price that's referred back to. We're looking at it being used right now. So here's that 9:30 open. And our gap was created just below it. CNQ, if it found itself in that gap. Let me find the prices real quick. Not sure if I talked about this last week, but oh my. So let's get rid of this and this. I'm going to draw these gaps out. So the high, 25,368.50. Lock that in place. The low, 25,347.50. How interesting is that? So this could be a bad indicator of lower prices. Or not, I wouldn't say a bad indication, but it is an indication that we might want to remain below, especially because we have this floating candle range. I'm at a mess right here. Yeah, so I'm going to be using this toggled off. That's very interesting to see. and something I'm going to take up with some other traders that I've been in the space with and have talked over some of these weird phenomenons. So more to come on that later. I just think it's very interesting how we revisited that specific price. It's like it's not a very large range, but somehow we worked into that to the tick. And I think that is fascinating. So I'm going to be closely monitoring that, and we'll have more information. But just keep that in mind, write the prices down. Just keep on your notepad, observe it, note it. But that's all I have for today. Thanks for sitting in. Uh, Maybe I'll be in later this week, but there's my levels. Okay. Be safe. God bless.